All right, everyone. I can see that there are still participants joining, but for the interest of time, I think we'll just begin, and whoever joins following this, can sort of keep up with us. Okay, so good afternoon, everyone. My name is Layla AlAlawi, and I'm an associate in the corporate structuring team in the Al-Tamimi and Company Bahrain office. Although we have a lot of attendees that have attended our first session.
Hi, everyone. Seems like Layla got disconnected, so I'll take over until she joins back. So as Layla was mentioning, we have a lot of people from our previous webinar, but we also have a few new joiners. So pleasure to have you all here. By way of a brief introduction, Tamimi and Company is the largest full-service law firm in the Middle East and North Africa region. We have 17 offices in 10 countries and over 3 decades of collective legal experience. We work for one simple purpose, which is our clients' success. So we're delighted to be holding the second. Hi, Layla.
So sorry, everyone. There seems to be technical issues, but I'm back. Thank you, Yara, for taking over. So I think Yara's just given an introduction to Al-Tamimi, and that's great. Thank you so much. We're delighted to be holding the second session of the Tamimi-Trends panel today, and we're going to be discussing the legal developments and updates for companies in the GCC with a specific focus on Bahrain, Saudi Arabia, DIFC, and Qatar for our second episode of this series. Just to let everyone know, this will be recorded, and we will also be responding to questions later on. So I'm pleased to introduce our panelists for today. You've already met my colleague Yara Frotan, who has kindly introduced. She's an associate in the corporate structuring team in the Bahrain office. And she works closely with, international, regional, and domestic clients, providing assistance in setting up commercial entities in Bahrain, as well as advising on regional group restructurings and providing advice on matters concerning Bahrain commercial companies law. So hi, Yara, and pleasure having you with us.
Hi, Layla. Thank you. Hi, everyone. A pleasure being here.
Next up, we have Somaia. Somaia is an associate in the corporate structuring team based in Riyadh. Somaia's practice focuses on transactions and business entity structurings, mergers, acquisitions, compliance and corporate governance as well, and foreign investment licensing in Riyadh. Somaia, it's great to have you with us today.
Hello, everyone. I'm very pleased to be a part of this webinar.
Next up is Joyce. Joyce is an associate in the corporate structuring team based in Qatar. Her practice focuses on general corporate matters, corporate structuring, and advisory work. She regularly advises clients on corporate legal matters and guiding them through the company structuring and restructuring procedures in Qatar. As well as overseeing company incorporation and liquidations and preparing corporate documents and agreements. So Joyce, pleased to have you here.
Thank you, Layla. Hello, everyone. Pleasure to be here.
Last but certainly not least, we have our Dubai UAE office, Noff. Noff is a senior counsel in the corporate structuring team based in Dubai. She has experience in advising on all types of corporate structuring matters, both within and outside of the free zones, with particular expertise in the Dubai International Financial Center, so the DIFC. It ranges from formation of entities, group reorganizations, advising on corporate structures, and all commercial activities at all stages. So Noff, it's great to have you with us today.
Thank you, Layla. Good afternoon, everyone. Happy to be here.
Perfect. So welcome to all our distinguished speakers and to all the attendees. It's great to see there's lots of you joining still and are logged on to this webinar. So we're looking forward to having an interesting cross-jurisdictional conversation regarding the new legal updates and trends in the GCC. We've had the first session a couple of months ago, and we'll be focusing on giving you just a brief overview of the updates to keep in mind for your business in the region that's occurred over the last few months since our first session. We're hoping to engage in a conversation, and I'm going to be, addressing some burning questions that you all have, as I've mentioned, at the end of the session. So, you know, hopefully we can have a very good and effective discussion today. So starting very close to home, Yara, we've had many developments in the laws of Bahrain over the past few months or so. So can you give us just an overview of the developments?
Yeah, of course. Thank you, Layla. Hi, everyone. So yes, you're absolutely right. We've had a few developments since our the first series of this webinar. I think most notably what I'd want to cover during today's talk is the MIC issued new regulations on authorized distributors. So decision number 29 of 2024. This plays a pivotal role in terms of foreign ownership restrictions in Bahrain. We can get into more detail on that. And then another area or topic that we could touch upon is corporate income tax and the introduction of domestic minimum top-up tax, DMTT, in Bahrain and the developments in these areas.
Great, Yara, thank you. So in terms of the foreign ownership restrictions and the updates on that, what was the previous stance and what's the current position now in Bahrain?
So to give some context, to give some background, Bahrain is a country that's continued to liberalize foreign ownership across the years. So most notably in 2021, there is a regulation published that listed out all of the commercial activities and the permitted level of foreign ownership for each of those commercial activities. So since then, a large amount of commercial activities were open to 100% foreign ownership. And then that same decision, the 2021 decision, listed out that some of the activities that remain at, you know, requiring a specific percentage of GCC or Bahraini ownership. So some activities need, for example, 51% GCC or Bahraini ownership, whereas again, a large number of activities minimize that to only needing a minimal percentage of GCC ownership, as little as even one share. So that could be 0.1% even. Now, more recently, however, and it's the topic that I want to discuss today, the Ministry of Industry and Commerce issued new regulations on authorized distributors. What this means is that any entity that engages in the activity of authorized distribution, so any entity that's authorized to distribute any sort of, you know, trademarked products in Bahrain, must be owned at least 51% by a Bahraini shareholder, so a Bahraini national or a Bahraini entity. And this is Bahraini rather than GCC. And that relevant distribution agreement that they have in place also needs to be registered with the Ministry of Industry and Commerce. So some other points to note from that decision, the authorized distributor decision, include that the entities must have on their CR, so on their list of commercial activities, there must be the commercial activity of authorized distributors. So this is a fairly recent activity that's been introduced by the Ministry of Industry and Commerce, and it needs to appear on the CR. In addition to your relevant sale trade activity, so that your specific type of product that you're selling, you're distributing, the sale trade activity that's relevant to that as well needs to appear on the CR in addition to the authorized distributor activity. Now, so what this means is that you need at least 51% Bahraini ownership if you're engaging in that sort of activity. But I'll caveat that with another decision that was passed in 2024. Now, this is decision number 22 of 2024, and it amends the 2021 legislation. The 2021 legislation that included the list of commercial activities and the level of foreign ownership required for each of those activities. Now, this amendment can be read alongside the authorized distributor decision. And this amendment provides that any companies that are wholly or partially owned by non-Bahraini shareholders up to 100% may be exempted to practice the activity of authorized distributor. so the 51% Bahraini shareholder requirement may be, you may be exempt from that. But there are obviously certain circumstances. So you're only exempt if any of the following circumstances apply. Number one, the company that owns the international brand is itself distributing the products within Bahrain. Number two, there's an active sole proprietorship or company whose capital is owned by at least 51% Bahraini shareholders that already practices the activity of authorized distributor of the same trademarked product in Bahrain. And number three, that the company is of economic importance. Okay, economic importance according to the criteria of the Minister of Industry and Commerce. Now, this definition of economic importance would be clarified in supplementary legislation. The decision relating to the criteria for economic importance, that decision has not been published as of yet. So this space of authorized distributor, while we've seen some developments, it's still not 100% there yet. We're still waiting for guidelines. And then even further to that, we've had verbal discussions with the Ministry of Industry and Commerce, and our understanding based on what they've said is that they're aiming to issue more additional guidelines in the near future to provide clarification. Further clarity on the authorized distributor decision and on any exemptions that may be applicable to any entities within Bahrain. So to kind of conclude in this area, while we're seeing certain restrictions being imposed on some activities, so for example, like authorized distributors, the restriction of 51% Bahraini ownership, it's a good sign that some of the supplementary laws and guidelines that are being introduced have some exceptions in place that a lot of entities could take advantage of. And again, Bahrain does continue to liberalize foreign ownership in the region. Even just last week, further clarifications were published on the 2021 decision. Further amendments were put in place whereby some international entities could potentially operate in Bahrain with 100% full foreign ownership, provided that certain criteria, certain requirements are met. So we're still looking for further developments in this area, but it's good to know that there's a good balance in Bahrain that everyone could take advantage of.
Thank you so much, Yara. That's a very interesting development, especially due to the liberalization of commercial activities in Bahrain. So it's good to hear. Although you're not specialized in tax law, I understand that along with these developments and along with the developments in the rest of the region, Bahrain is looking or has looked at incorporating a corporate taxation law that will be coming into effect soon. So can you give us perhaps just a quick lowdown on the tax side of things for Bahrain?
Yes, you're absolutely right. So corporate income tax will be introduced fairly soon. There hasn't been much development from our last webinar. I know we touched upon this in our last webinar as well. The specific details, any intended dates of any corporate income tax, they've not been announced yet. But it's still anticipated that it's going to take place. The intended date is Q1 2025. That's what all of the relevant stakeholders are saying. Understandably, the most important, I think, question or the most popular questions would be what's the tax rate? What's its relevant thresholds? At the moment, there is no public info on this. It's still being studied and considered. We're still waiting on set numbers to be put in place available for the public. But what we can suggest, however, is that we don't expect it to differ hugely from the other rates in the GCC. So 9% in the UAE, for example. We're still on the lookout for more updates on corporate income tax. We're speaking with the relevant stakeholders. So we're definitely expecting more developments in this area pretty soon, looking at the intended Q1 2025 date. Now, in terms of domestic minimum top-up tax, DMTT, I just want to touch upon this pretty quickly. Bahrain announced that it'll implement a domestic minimum 15% top-up tax for financial periods starting on or from 1st of Jan 2025. To give some background, the OECD's main driver across the globe is tax transparency, tax consistency. So the implementation of DMTT in Bahrain is in line with Bahrain's commitment to kind of meet international standards, to meet that tax transparency, tax consistency, to avoid or prevent any harmful practices in the tax world. The DMTT law will be applicable exclusively to multinational enterprises operating in Bahrain, with global revenues equal or more than 750 million euros in 2 of the last 4 financial years preceding the relevant financial year. DMTT will be applicable on taxable income and is payable by a designated filing constituent entity on behalf of the multinational enterprise group. So again, this is all in line with the OECD's requirements, and it just confirms Bahrain's status as a compliant jurisdiction, as a jurisdiction that's part of, you know, the global tax landscape, the global tax regime, to make sure Bahrain is compliant.
Thanks so much, Yara. Thank you. You know, it's good to hear that that threshold is on the multinational enterprises only. So I know that the small businesses don't need to really worry about the DMTT at the moment. So that's very, very good.
Thank you.
So on to our neighbors in KSA, so in Saudi Arabia. Somaia, you know, we discussed last time all of the foreign investment developments that's happening in KSA. It's you know, hot topic at the moment. So we note that there may be a new law that's anticipated to be coming into force next year. Could you please perhaps elaborate on that and give us a bit more detail? That'd be great.
Yeah, that's true. There will be a new investment law will become into force by the beginning of 2025. This is according to the recent approval by the Council of Ministers. It will be introduced, the law, at the beginning of 2025 with an aim to stimulate the economy, diversify revenue, and also improve the business environment to align with Saudi's Vision 2030. So the new investment law consolidates the rights and duties of both local and foreign investors within a unified legal framework. And we will find some key elements of the new investment law, which are not found in the current law, or it will be enhanced in the new law, which are the greater transparency and clarity on the rights and duties of both local and foreign investors, the easing of regulatory restrictions by replacing the previous foreign investor licensing with a simplified registration process. Also, the application of equal treatment between local and foreign investors, they will almost be the same. Also providing investment incentives to attract both local and foreign investors and promote further rights of investors, such as the intellectual property protection, freedom to manage the investment, and also the right to transfer funds within or outside Saudi. Also supporting an enforcement of fair competition, and this is also for the both local and foreign investors. Also, the Ministry of Investment of Saudi Arabia, MISA, will provide a service center specifically to facilitate transactions and more efficient investment procedures. So MISA has provided the new investment law following an extensive consultation and collaboration process with investors and in line with the global best practices. And the new investment law is expected to have an immediate and positive impact on the financial, economic, functional, and social aspect as well of the kingdom, such as increasing the non-oil revenues and job opportunities, attracting investments, achieving economic diversification, enhancing as well the private sector contribution.
Thank you, Somaia. That's that's a trend that we see across the GCC at the moment, which is the diversification of non-oil revenue. So it's great to see the KSA, Saudi Arabia is actually doing that. So in addition to the foreign investment laws, as per our contacts in the market, I believe there are other laws that are soon to be amended or introduced in KSA. Can you just give us more detail?
Yes, there are also some changes on other laws as well. And I think they're all complementing each other to have better implementation of the laws. We have a new commercial registration law and new trade name law. So the Council of Ministers has recently approved these two significant legislations, which are the new commercial registration law and the new trade name law. They will be governed by the Ministry of Commerce, and they're expected as well to become enforceable in 2025. And these updated laws will enhance the efficiency of business operations and lessen the regulatory burdens faced by companies. Also, these updates on the laws are strategically aligned with KSA's Vision 2030 initiative, aimed at reforming the business environment in Saudi, which emphasizes economic diversification and modernization as well. We noticed that the purpose of these updates is to create a more conducive environment for businesses by simplifying companies' registration process, embracing digital innovation as well, and organizing trade names reservation and ensuring its protection from IP violation. And by doing so, the new regulations seek to facilitate the growth of the private sector and attract as well both local and foreign investments, ultimately contributing to KSA's ambitious economic transformation. And also, we will find key elements of the new commercial registration law. We will now focus on the new commercial registration law that are not found within the current law, and those elements will enhance the implementation with the companies as well. We will start with the unified commercial registration system. So the new commercial registration law will introduce a unified commercial registration system across KSA to replace the previous regional-based system. So this change eliminates the need for separate regional commercial registration certificates. We call it a CR, streamlining the process and ensuring uniformity throughout KSA. And this will result in companies being allowed to only have a single national CR that covers all activities of the company and its branches activities too. This is to simplify as well the administrative burden on businesses. The second point is variety on activities under a single CR. It will become permissible by the new law for a company to conduct several types of activities, including the main company activities and the branch activities under a unified CR, even if the activities are not within the same nature. There will also be a grace period for existing companies. So the new law will provide a grace period of 5 years for companies to rectify the existing branch CRs by two ways. Either to transfer the company's branch CR by establishing a new company, or to cancel the branch CR and transfer the branch CR activities and assets to the main company CR. There is also an electronic confirmation of the CR information on an annual basis. So the current law requires the CRs to be renewed annually, but the new law will eliminate the expiration date of the CR. And alternatively, companies are required to confirm the CR information every 12 months from the date of the CR issuance. If the company fails to confirm the CR's information during the statutory period, then the CR might be suspended for 3 months and would be cancelled electronically within 1 year from the suspension start. And there will also be alternative penalties measures. So there are alternative penalties measures for violations caused by companies, such as warnings or rectification of violation to be applied. Now we will have another focus on the new trade name law, and we will discover the key elements and changes in there. So now the trade names can be reserved prior to registration for a specific period, which is extendable. Also, the trade names may be in Arabic or any other language, including translated words or combination of letters and numbers. Also, the trade names can be treated independently from the company, allowing for their assignment to others. And also, the relevant authority will provide Arabic experts portal to enhance the linguistic Arabic names in the commercial environment. Also, the trade names must be appropriate and misleading. This is always the case. Reserving the trade name that is similar to another entity is prohibited regardless of the differences in their activities. So these upcoming commercial registration law and the trade name law are designed to greatly improve the business landscape in KSA, and it promotes both local and foreign investment by simplifying the registration and incorporation procedures. And these updates are set to be implemented in 2025, and all companies will be required to comply with them. Additionally, these updates will aim to create like a more efficient business environment by reducing hurdles and ensuring that the registration process are smooth and straightforward. And this initiative is expected to attract a diverse range of local and foreign investors and stimulate economic growth and foster innovation within KSA.
Thank you so much, Somaia. That's very insightful, actually. And just to draw a very quick comparison to Bahrain, it seems that, you know, the KSA laws are you know, quite similar actually to here, you know, with reducing the administrative burden and liberalizing trade names to be utilized by the companies in the GCC. So that's very, very good. You know, a synergy between all the jurisdictions that we've been spoken about in this webinar or this panel is foreign investments and permitted activities. So Joyce, in Qatar, we heard that there might be an update on this too. Let us know what's the news.
Yeah, so hi again, everyone. Yes, Layla, so we have few yet interesting updates for Qatar, and I will start by sharing some recent updates regarding foreign investment regulations. So as a brief introduction, foreign investment companies are those where foreign investors, meaning non-Qatari or GCC nationals, own more than 49% of the share capital of the company, up to 100%. There are no updates to the law, but in practice, there has been ongoing changes to the list of permitted activities. As you may know, foreign investment companies incorporated under the Ministry of Commerce and Industry are not treated like Qatari or GCC-owned companies in relation to what activities they can perform. So in 2023, the Ministry of Commerce and Industry issued an official list of permitted activities, but recent months have seen amendments. So certain activities have been added or removed from this list. Currently, there is no definitive amended list available as official list of permitted activities. So reconfirmation from the ministry at the moment is advisable to make sure that no additional changes have been made. So if anyone would like to explore if they can establish a foreign investment company at the Ministry of Commerce and Industry, they should not rely on the list of permitted activity currently available, the one of 2023, or on the information made available on the ministry website, and must confirm with the ministry regarding such possibility. Regardless of like now the like instability of what activities are permitted or not, Qatar's continue to encourage foreign investment, and overall the process is becoming easier with simplified requirements.
Thank you so much, Joyce. Thank you. So, apart from that, there has been some stirs in the market, I believe, in Qatar with respect to the Qatar Financial Center Authority and certain regulations regarding the same. So, can you elaborate on that?
Yeah, indeed, Layla. So Qatar Financial Center Authority and Media City, which is also an institution where investors can incorporate companies related to media, radio, TV, and advertising. So they are collaborating to enhance investment opportunities within Qatar's media ecosystem. Although the practical implementation remains unclear, and it is uncertain if these measures will extend to existing media companies under QFC, but it is interesting just to mention that the Qatar Financial Authority is working on introducing a distinct classification of activities related to media, advertising, and other related services. Although these activities are currently under QFC, they are permitted under the Qatar Financial Center. However, they will be moved into a special category that will require prior approval from the Media City in Qatar. So basically, any person who would like to incorporate a company which activities is related to media or advertising, radio or TV, they must first submit an application to Media City, and they will get a kind of pre-approval or license. And then they will move forward with the incorporation as if it is a Qatar Financial Center company. So Qatar Financial Center will oversee the regulations of the registration and the licensing. They will also support in anything related to governmental processes and tax administration. The Media City will only provide the pre-approval, and they will make sure that the company is complying with the regulation governing media entities in Qatar. So as I said, this is still not very clear how it will be implemented in practice. And the law or regulation also does not mention if it will apply to existing media companies under QFC, if they will need to get any approval, which we think it is not the case. Yeah, but this is how things are going. So the collaboration is there, and we're waiting to have more clarity on how it will be implemented in practice. Yeah, so I would like to finish my intervention with the most recent update we have in Qatar. It's the law number 12 of 2024, which addresses the localization of employment in private sectors. So this law was published in the official gazette on October 17, 2024, and will take effect 6 months from October 17, from that date. So according to this law, private companies registered under the commercial registry, among other types of entity, but I'm focusing on commercial companies, which are registered in the Ministry of Commerce and Industry and other institutions, like companies who that have a CR, are required to hire Qatari nationals. And if no Qatari candidates are available for the position, or they are not properly registered at the Ministry of Labor, they may consider the children of Qatari women also. They will have the priority to take the position. So the Ministry of Labor will have to issue subsequent regulations because the law is still unclear regarding the employment plan of the private sector, including which companies or entities will fall under this law. So it's not clear if all types of companies, regardless of their activities, will be required to employ Qatari nationals. The required ratio of local employees, so we still do not have percentage or how they will calculate the number that is required to employ, the job types, and any necessary training or requirements. So the ministry will also identify which position must be exclusively filled by Qatari nationals. So while the law stipulates the necessity of local employees, the exact ratio and the exact procedure and details will be determined through subsequent regulations from the Ministry of Labor.
Thank you so much, Joyce. The developments in Qatar sound very interesting, and we look forward to hearing any updates perhaps in our next session on these items that you've spoken about. So, Noff, in Dubai, in particular, the DIFC, what's happening with respect to the company regime there, and what are we expecting moving forward?
Sure. So in terms of DIFC, the most recent development when it comes to the company regulations was the revamp of the DIFC's prescribed company regulations. And today I'll be discussing what those key changes are and how they may impact, an existing DIFC business, or perhaps if you want to consider establishing a new company under the new prescribed company regime. So perhaps I'll start by just, if you're new to the UAE or the DIFC, just giving a brief background about DIFC. So DIFC, as you're mostly aware, is one of the world's leading financial free zones in the region. And it has a robust legislative framework that is based on international best practice. DIFC has a diverse range of companies across various sectors, including financial services, professional, technology, and also licenses the vast majority of investment and holding companies. So when we're discussing prescribed companies, I think a key question to ask is, what is a prescribed company? So essentially, it's a type of company, a specific type of company that's either established for a specified purpose or in order to hold and manage assets. So it's typical like an SPV type structure. And the beauty of a DIFC prescribed company is that it's still a private company limited by shares. It benefits from the DIFC sophisticated legislative regime, but it's incorporated at a subsidized cost. So whereas a typical private company limited by shares in DIFC is the license and registration fees are around $20,000, a prescribed company can be established for only $1,100. So it is an attractive vehicle that DIFC have introduced, but now with the new regime, they've expanded on the eligibility criteria. So in the previous regime, a prescribed company could be established for in two ways, either for a qualified purpose or through a qualifying applicant. Now, in the new regime, a prescribed company can still be established through a qualified purpose, but the qualifying applicant aspect has been expanded on. So under the new regime, now, in addition to the definition of a qualifying applicant before, which was any DIFC registered entity or a UBO of a DIFC registered entity, a prescribed company can be established or controlled by a GCC citizen, or a company wholly owned by a GCC citizen, or by way of owning or controlling a GCC registered asset. So in addition to that, the DIFC also expanded to allow the qualifying applicant to also be any person whatsoever, provided that the director position of the prescribed company is held by a DIFC registered and approved corporate service provider. So that just makes the regime more flexible and accessible and in line with international standards when it comes to SPVs. But now, when considering the operational aspects, under the new regime, a prescribed company is restricted to only providing holding company activities. In the previous regime, a prescribed company could also conduct proprietary investment, managing office related activities. So that's the distinction there. And also in the previous regime, a prescribed company could also hire employees, which is no longer the case for the new prescribed company. So in order to bridge the gap and also cater to the existing companies that were established under the former regime, the DIFC introduced what's called a commercial package. And under the commercial package, there is an entity that the DIFC created, which is also subject to the subsidized fees, which is $1,100. But under the commercial package, these companies can also conduct holding company activities, but also other proprietary investment and managing office type activities that were offered under the previous regime. And entities under the commercial package can hire employees. Now, when it comes to the eligibility criteria for companies under the commercial package, It's similar to the previous regime in the sense that it can still be established for a qualified purpose. However, the definition of a qualified applicant is similar. It can be any DIFC registered entity apart from a prescribed company itself, or a non-profit incorporated organization, or a foundation. So that's where the distinction lies. But other than that, it can be owned by any other DIFC registered entity, whether it be a DFSA registered entity, and it can also be owned by a UAE or Emirate government entity, or a company that is at least 25% owned by a UAE or Emirate government entity. So that's pretty much it in a nutshell in terms of the prescribed company regime. So you have the prescribed companies now, which are pure holding companies, still subject to the DIFC companies law, still considered a private company limited by shares, but now it's more geared to only providing holding company activities and with a more GCC nexus. And then the commercial package that is more broad in terms of holding company, proprietary company activities, managing office, and can have employees, whereas the prescribed company cannot. So it's just two offerings, again, to just be more flexible and accessible for DIFC clients. That's pretty much it. And again, I understand that this is a lot of information to just digest. So after this webinar, if you have any queries, if you want to know more about the regime, more than happy to walk you through and advise you further.
Many thanks, Noff. I think that that was a very good overview of, the distinction between the prior, framework and the now current framework. It's good to see that flexibility with that commercial package as well. So, it's great to hear. With an eye on time, so we're at 12:47 or 1:47 in the UAE. I'd like to kind of pass the mic over to the attendees for questions. Pass the mic. So perhaps I'll say you can put your questions in the Q&A box that's below here, and we'll address the same. Just to state before we start addressing, if we don't address any of your questions during this webinar or panel session, you can leave the query in the chat box with your email ID, and we can get back to you on a high-level response to that as well, okay? So I can see a few questions here. Let's start from, the first one. I think we'll have both Yara and Joyce respectively answer this question. So the question here is, are UAE free zones considered foreigner or GCC if all its UBOs are UAE nationals? So let's start with Yara, and then we can go on to Joyce in Qatar.
Thank you, Layla. It's a good question. Thank you for the question. So let me start with free zones. It was kind of a gray area in the beginning with the ministry because they're not really mainland, but they're not really outside of the UAE. I think the unanimous stance as of today at the ministry is if an entity is registered in the UAE, free zone or not, as long as at every level of the ownership chain, that entity is owned by UAE nationals or entities or GCC nationals or entities, then it would be considered a GCC entity rather than a foreign entity. That's for Bahrain.
Thanks, Yara. Joyce, for Qatar?
Yeah, well, it's similar for Qatar also. So any GCC company, regardless if it's free zone or mainland, it is considered a GCC company if like the end individual owner is a GCC national.
Perfect. Thank you so much. So we have another question here. Hi, Mehreen. I believe that's from Mehreen. It's aimed to Somaia in KSA. So the question is, on a single CR in the KSA, does one still need a branch premises to employ a non-Saudi employees? So for instance, if they have a head office in Jeddah, can they have multiple non-Saudi employees in Dammam without setting up a branch in Dammam? Somaia.
Yeah, that's a good question. But as you know, that these updates are quite new, we still have no clarity on how employees of branches will be treated and the exact implementation of the branch CRs transferred to the main CR. So we still have no clarity on the implementation of the law, but we expect to receive it soon, hopefully. And we can keep you updated. if there are any updates on that.
Thank you, Somaia. I think, just a note to the attendees, these are very, very new and relevant laws in the region. And as you may be aware, with the introduction of a new law, there's going to be subsequent guidance and follow-up from the ministries. And so we will definitely keep you all updated, and we can address your questions once we have further clarity. We have another question from Mehreen for Bahrain. So the question is, for the new law on authorized distributors in Bahrain, what was the previous requirement, and can such distributor now demand compensation on termination?
Thank you for that, Mehreen. So I think previously the way it worked, it wasn't really as regulated in Bahrain, as long as the entity, so I think there were kind of mainly two branches. Number one, either you don't really have an entity in Bahrain, your trademarked products are sold through an authorized distributor in Bahrain, a Bahraini authorized distributor, and they just registered as kind of like on the system, MOIC system, as they're the principal that is authorized to sell these products. Or you just have a regular CR, a regular entity with your normal sale trade activities on the CR, without the authorized distributor activity that you now need to add on your CR. So for the latter instance, the law doesn't give kind of any compensation. Instead, what it does, it just gives you some leeway, some time to fix your position. So fix your shareholding, introduce a Bahraini shareholder at 51%, register your agreements, add the authorized distributor activity. We've had verbal talks with the ministry that very informally what they told us is right now they're not taking kind of quote unquote a proactive approach on penalizing the companies. So companies have leeway to kind of fix their situation, and then only afterwards is when they're going to take the more proactive approach. The law does provide for compensation, I think, going forward from the perspective of the Bahraini shareholder. The 51 Bahraini shareholder, if at any point needs to leave the company, the ministry requires some sort of justification for that. So the termination can't just happen without the intervention of the MOIC. But again, as Somaia mentioned in the KSA, Bahrain, this area is it's an area that's in high development. And even based on our talks with the ministry, they've confirmed to us that there's still some guidelines, some clarifications that are going to be published in the near future. So we're waiting for those guidelines for further clarification as well.
Thank you so much, Yara. That's great. We have a question from Shane Elstrom. So while I know this is not tax related, is there any update on VAT for Qatar? Joyce?
No. So VAT is still not implemented in Qatar. We only have for now the tax, the net profit, on the net profit for companies, foreign investment companies, which is 10%, but for VAT, it's still not implemented.
Thank you so much, Joyce. 1 second, let me just go through the questions. Apologies. Okay, there are quite a few questions here. So there's a question from Siad Hussein. I wonder if this is for, oh, okay, I believe it's ESR related. 1 second. Apologies, there's just a lag on the question box. 1 second. I think what I will do is I'll just hand over to Yara to just do a quick overview on ESR for Bahrain, and then I believe there's another ESR question for UAE, and I'll address it in a second. So
yeah, so ESR in Bahrain, I'm not sure whether the question was directed to Bahrain or the UAE, but I can give a kind of overview on Bahrain ESR. There is a recording, by the way, of this session. But ESR is in Bahrain, it's we have kind of like the guidelines that would assist companies in knowing what to do or what the point of the ESR is. But from a practical perspective, the ministry have released a kind of a list of activities, ISAC 4 codes, and if that ISAC 4 code appears on your CR, then you are subject to ESR, basically. And essentially, in terms of the submission of the ESR in Bahrain, it's in an online application, kind of like an online questionnaire. And it's done by way of through the NBR system. It's an ITIES system. You need to have login credentials for that. And then it's just a matter of responding to questions for that financial year, attaching any relevant documentation and justification for where your answer kind of is not quote unquote compliant for that year. So for example, if you, for example, not held any meetings on ground that year, and you mark that as no, you have a comment box to justify that, and obviously attaching any supporting documents. So that's kind of the ESR process in Bahrain.
Thank you so much. Thank you. Noff, can you address anything for Dubai for that, or DIFC?
Yeah, sure. So for the UAE, there was a cabinet resolution, I believe it's number 98 of 2024, that basically mentioned that the ESR regime will be cancelled following the financial year ending 2022. So any filings to be done in 2023 is no longer required. So and any penalties associated with filings after that will be reimbursed. So that's the latest update in terms of the ESR and the UAE.
Thank you so much, Noff. Again, if you have any further questions on the ESR side, then you can definitely leave the question in the chat box, and we can address them following this webinar. So just what we'll do is we'll conclude there. Please do leave your questions. We will address them. And I want to thank the whole panel today for giving us insights into their respective jurisdictions. Thank you to all the attendees who have joined online. We really hope that you found this to be a helpful panel discussion. We very much hope to see you in our next episode. We'll keep you updated on any of the forthcoming laws in the region so that you can, help maintain your businesses here in the GCC in accordance to the laws. So thank you, everyone. And please do leave your queries and we'll address them. Okay? Thanks, everyone. Thank you.